Hello, good afternoon. You're watching Markets at Noon on ET Now. I'm Vinny Motiwala and with me is Ajay Sharma as well. Ajay, very good afternoon to you. And markets today, opened up slightly on the positive side. Now, given up those morning gains, but we have a lot of commentary that's coming in. Seems like,
Vinny, there was a small gap up, 70-80 points, and it went all the way to 150 point gain on a Nifty intraday. But the way we gave up all the gains, almost flattening out, is something to watch out for. Bank Nifty too has given up bulk of the gains. Pull up the small cap, mid cap, you would see they're already trading without any gains, which is flat but without any gains. It tells you how soft the sentiment is right now, weak the sentiment. Bulls are not ready to take chance. In fact, shorters are coming at a very higher levels. Pull up India VIX. The only thing to watch out for is India VIX, which is cracked 6% today. The second half of the trading session actually becomes even more important, because bullish bets are not being rewarded. In fact, the 1100 point rally which came from 21,800, we have given up almost 50% of that. Yeah. So second half is when the trades for exit polls will be taken. Meanwhile, before you go to Dharmesh Shah, need to look at the commentary which is coming from S&P. Remember, S&P has improved the rating just 2 days back, and now S&P is saying that government is actively investing in infra without widening current account deficit. It is a positive. It also says that fiscal consolidation will help reduce long-term debt burden on India. Again, a positive. They are actually giving a commentary in the con call that fiscal policy is likely to see continuity, and the reasons for the big upgrade which they recently did. So that's some of the commentary coming from S&P. But Dharmesh Shah is here with us to talk more. Dharmesh, the bulls are right now the scared lot. They were riding long positions. Some got stop lossed. Some booked their long positions. And those who are holding are bleeding on a MTM basis. Would you recommend buys right now, or the data shows that there could be more downside? How would you be positioned ahead of exit polls for trade?
Good afternoon, Ajay. Yes, definitely market has not been so kind to us for this current week, as we have already seen 700 points corrections from the high of 23,100. But let us understand one thing. We have seen a rally from 21,800 to 23,100. So almost 1,000 points rally Nifty. What we see currently is nothing but a profit booking or a retracement, you can say, for rally which happens from 21. So we believe, I think, so this is a normal profit booking, and this current corrective phase should see a support around 22,000 to 22,100. So we don't see much of a negative change right now. Yes, corrections are part and parcel of the bull market. Let us understand one thing, that before entering into a big event of election outcome, market seems to be in a very lighter.
Have we lost his connection? I think we're connected with Dharmesh on a very patchy line. We'll reconnect with that. And what he was talking also, that right now ahead of it, yes, volatility will be there slightly. Maybe correction is a part and parcel of what you see in terms of the markets. But yes, that everyone is watching out for those key events, right? Next week is surely going to be exciting. From tomorrow, we'll be seeing those exit polls. And 4th of June is the verdict of the election outcome. Then we do have the RBI MPC policy meet that is there. We have the Fed meet, ECB meet, a lot of central banks meeting tomorrow, and everyone's keeping an eye out on that, whether Fed will be taking a rate cut. On the back of that, we'll be seeing RBI taking a rate cut, so we'll keep an eye out on that. But as of now, clearly market's quite flattish, 22,500, just managing to hold on to that mark. A lot of movement in terms of individual stocks that we have seen right now. Whether you look at something like Nipka Labs, that's down and out, reported its numbers a couple of days back, but today also clear pressure on the stock, down 6%. We're seeing some of these pharma names today. So Aurobindo Pharma, Laurus Labs, not managing to hold on to any bit of a gain, whether you look at Cipla, Alchem Labs. So today it seems like a different story for pharma from what we had been seeing, where everyone was talking about defensives managing to hold on. Today pharma is among the top sectoral loser. It's down almost 1% in trade. While when you look at it, seems like metal is getting its shine back today. So yes, metal names seem to be holding on to some bit of a gain. That's up almost 1% in trade when you look at the Nifty metal. I'm going to see some of the names that we have in terms of what is Hindalco doing, what is...
Dharmesh is back actually, Vinny. Yeah. So let's take the discussion forward with Dharmesh. Dharmesh, what are your trading calls right now? How to position ahead of this big event?
So I complete my Nifty part and was washed out. reason. So we were seeing that, I think, so if you look at the Nifty, I think, so we expect Nifty to surpass this 23,100. This should be looking for a target of 23,400 for the Nifty, keeping a stop loss of 22,000 on the Nifty. So overall, I think, so if you look at the market trend, I think so 200-day moving average always been important. Even current corrective phase, 74% of the stock in CNX 500 are trading about 200-day. So this is a good sentimental indicator to understand the market. Maybe I think so the short-term 1-2 trading session, we will see some bit of profit booking. But we expect in the second half in today's trading session, there should be a technical pullback towards 22,500. So yes, buy the dip should be the strategy in the current.
Okay, now tell us about your trading calls.
Yeah, in terms of trading calls, Ajay, we believe I think so the Reliance Industries remains to be a top pick in the current corrective phase. I think so if you look at the Reliance, I think the stock has seen a good from 2,200 to 3,000. What we have seen is the stock has hardly corrected 8% of the current last correcting major move from 2,200 to 3,000. So shallow retracement and again a strong base formation or a support in the range of 100-day EMA, which is placed at 2,800. We believe Reliance on the weekly chart is making a higher top higher bottom formation. The last lows still not broken. Believe I think so the next week we should see a pullback happening for Reliance and we should be for target of 3,100 for Reliance, getting a stop loss of 2730. Second stock which we like is JK Cement in the cement space. Now infra again we remain to be constructive positive for infra space. Coming to JK Cement again, the most of the cement stocks have seen a healthy retracement post result. And JK Cement again is been forming a strong base at 200-day moving average, which is placed at around 3,900. So we believe I think so for JK Cement, the risk reward looks more favorable at the current level. We are expecting a pullback happening for even JK Cement from the current levels. Keeping a stop loss of 3680, one can look for a target of around 4,455. So JK Cement and Reliance remains to be at top in the current phase.
We'll let you go on that one. Thanks so much for that.